Hi, this is Doug Howard, President of Growth Team Strategies with Kathi Fleck, one of our senior consultants, with another episode of Selling the Dream. Kathi, how are you today?
I'm doing great. It's a beautiful day in Texas.
Is it? Well, it's probably
Yeah,
always a beautiful. It's actually oddly a beautiful day in Maryland too.
very
Um,
nice. That's
but I
even
heard
better.
it's a little chilly in Canada and slightly less so in Wisconsin. But that's a whole different story, right? So, all right. So today we're going to talk about something that I found very interesting. I know you've been doing some studying. You're working on your designation for exit planning and that kind of thing. But this notion that, when we think about succession planning, I think most of us think about what you do at a very senior age after you've had a business for a long time as you're getting ready to retire. But that's not what all succession planning is. And in fact, there are a lot of statistics now that are coming out that are showing trends that may not be even the biggest portion of where things are going in the succession planning arena. I also know that business succession, they're talking about a business succession boom over the next, 10 years or so, because so many people that are in businesses have either gotten to that point where A, they are going to retire, or for an earlier generation, maybe they've reached a certain level of success and their intention is not to stay with one business for their entire lives,
Hmm.
right? And, right now, honestly, in terms of what we're doing, and a lot of the growth team, um, we're in a career that's beyond having had a business, grown it, and sold it, and none of us retired, right? Um, so, when do you think, Kathi? I was looking at a statistic earlier that said people start planning for retirement, start saving for retirement at 31 years old. And to me, now maybe that's just because they go to work for somebody that's got some of that built into their compensation. For others, maybe they're more conscious about it. Um, I had so many kids that I was trying to raise at that point. The thought of putting away much money for retirement, other than what some employer was doing, was a little bit foreign. But
Hmm.
that struck me as a relatively young age, and certainly much younger than the impression I have of people thinking about succession planning for their business.
Yeah, it's a good point. I know that I wasn't able to start saving for retirement at age 31. It was later. As I look back, I think, well, probably I could have, but I would have had to really adjust my spending or my savings, whatever. But I think it makes a huge difference when you're starting to plan for retirement much earlier than, say, ready for to retire. So we've talked about a lot of business owners who don't even plan or think about selling a business or transitioning it. They don't know what they're going to do. And then they're at that age of retirement and they might just close the doors or they have a health issue or they don't get the value for their business. So I do think that it's really important for a business owner to start thinking about succession early on. Now, we work with some pretty young clients who are in their 30s and 20s. That may not be anything that's on the radar for them, but if they can start early, they're going to have a much more viable business to sell or transition when they're ready to, or maybe even at a younger age.
Yeah, it's interesting because a lot of times when I'm working with business owners, I'll just ask them. They can tell me about their profitability or lack thereof. They can tell me some of their goals. When I ask them what the value of their business is, a lot of times they have absolutely no idea, right?
Mhm.
Or they've done some rudimentary calculations, but for most of us, if we own an asset, especially an asset that's supposed to appreciate over time, whether it's an investment fund or a 401k or even a piece of property, we have a general sense of I bought it, it's appreciating in value. It makes sense to continue going in this direction. To me, one of the biggest assets a lot of people are ever going to have is the value of the company they built, right?
Exactly. Yeah.
Right. And so, if someone's got a business that one day sells for 1.5 million, are they going to someday sell a $1.5 million house? Maybe, right? Do they have other assets? Have they accumulated a couple $1 million in a 401k? Maybe. But for most people, that's a pretty big asset if they get that far. And I'm amazed that that whole notion of what the value is the value growing, and how do I even measure it, seems to be off the radar for most people until they get very close to thinking about succession seriously.
Right. Right. I have a financial advisor who's also an entrepreneur, who was always saying if you invest in yourself and your business, things that you know versus say the stock market, it's a whole different philosophy. But if you invest in yourself and your business, that's your biggest investment opportunity, because you're going to be able to grow that business and at some point decide to sell it. So I really think the notion of preparing early, maybe you get a valuation, maybe it gives you a starting point. It's kind of like when we're working with our clients and we're looking at their financials or building out a 5-year model. Those things are really important to help them get to where they want to go. And if you know something about it, you can then do something about it.
No, that's exactly right. And we've had Jim Laird on this podcast before, who does valuations, and the amount of cost involved in having a decent or good third party evaluation done, especially early on, is not really cost prohibitive. And I think people in general, as they're kind of moving through what their objectives should be, even with some of the work that we're doing with peer groups and things like that, we are starting to now try to get people to buy into the notion of, we're going to at least come up with a way to evaluate your company value year in and year out, and the things that drive that value, right? We've talked about some of the intangible things like value builder. We've talked about some of the mathematics, the calculation of what, drives a selling price. But also there are long-term things like, what industry should I be in? Or is that a growing market? Or, so many people's businesses are where they are because that's where they started. And I have people that will often tell me, I wish I was 2 towns over because we'd have a lot more visibility, or our market area would be better to find. And to me, when you're very early on in your career, there's a lot of options to say, how do we align this stuff up so it's going to have the maximum impact on all of those things?
It's a very proactive approach. As you're talking, I'm thinking about a cousin of mine who is in Florida and is in the oil industry with partners. And as I speak with him, it's a very difficult industry to manage and grow. And he would like to get out, but partners don't want to. So it creates a whole different arena without having a real plan in place from the very beginning.
Yeah. Yeah. So I think so what do you think some early steps are? I know you talked about getting a valuation, but sometimes it seems to me that folks that are earlier on in their career, it's a conversation they don't really even think about having.
They don't. I know. And as we're talking to some of our younger entrepreneurs who I think, oh my goodness, if I had started at those ages, I would have been so much better off in growing my business versus doing it towards the end of my career. But I do think that the notion of even talking about it, thinking about it, it's kind of like working with an financial advisor early on. I think our younger generations are more interested in financial advisors early on. They're looking at, it's becoming more common. So I think the other thought about getting a business prepared to at some point exit, whether
Yeah.
it's exit and sell to children, or to sell to a private equity firm, or maybe go buy another business and start something else because they're really not ready to retire from a career standpoint. I think it's really important for them to take a look at it and and be open to it.
Yeah. I mean, it does seem like there's a little bit of a generational shift in that, to me, years ago, when someone started a business, the likelihood, as long as the business was successful, that's just what they were going to do until they were done working.
Right.
And I don't know that that's really the perspective of, everybody today.
I don't think so. I think there's a different focus on work-life balance versus working hard all the time and just continuing to work. And as I look at the different generations that have different mindsets, they have a different focus.
Yeah. Well, and you look at certain people and it's like they're sort of serial entrepreneurs.
Yeah.
A lot of times we talk about the fact that we work with folks that had a passion for the work that they're doing and didn't really go into business to have a business, right?
Right. Right.
But also, I think we're seeing a group of people that are less passionate about the specific work that they're doing and did go into business to have a business and grow
Mm-hmm.
it and sell it. And it's not this big emotional, my grandfather started it and we've been here for, I can see my hash mark on the tree and the outside the office and
Mm-hmm.
how tall I was and all those things, right? It comes down to more, I want to come in, buy something, add value, and then move on to something else. And I think we're seeing that in the workforce too, right?
Right,
I mean,
right.
years ago, we were taught like you found a great company to work for and you did your 25 or however many years and you retired from them,
Mm-hmm.
right? And we used to, I remember years ago, even looking at applicants for like when I had the accounting firm, and it's like, man, if you've worked like 4 places in the last 10 years, you were considered to be like erratic, like a bit of a jackrabbit, right?
Yeah, and it's not that way anymore. The expectation is that they will move around and also looking for growth opportunities within a company. And if it's not there, they will probably move on.
Yeah, yeah. It's also interesting too because some businesses start as one thing and they morph into something else.
True.
And I think when people see themselves as being one thing, they miss some of those opportunities,
Mm-hmm.
right? As opposed to saying, okay, here's a group of people I'm serving, here's what I'm trying to bring to the table. And today it may look like this, but tomorrow it could look very different.
I know I thought my business, when I started my business, I had been in the staffing industry. And so it's a way of assigning a temporary employee to a specific job. And so I thought, well, that would be the model that I would use with handyman. And I would end up assigning handyman out to different clients. And then all of a sudden, somebody asked me if I would handle the design and remodel. And I thought, oh my goodness, I don't really have this expertise. But in essence, I did. I just didn't realize it.
Yeah.
So my business grew into that, which was a much more profitable and fun-loving business and just employing handymen for a couple hours.
Right.
So it
Right.
can very well change, and you don't really know that until you get into it.
Yeah. No, I think it's very interesting. So, I think in terms of some of those trends, but I think like anything else, right? The hard thing is, and it took a long time for people to, really, I think when I was younger, people didn't talk as much about retirement planning as they do now. It was not
No.
common to see commercials on TV or, I think there's been an adaptation to this sort of idea that it needs to be done earlier on. I don't see that as much on the business side, but I do think there's some opportunities. Like, for instance, we know we work with certain industries, right? And as we're working with different industry associations or have speaking opportunities, maybe we even need to be thinking more about like, you know, why, every business owner under the age of 40 or whatever it might be, needs to think about what their succession plan is.
Hmm.
Or, I know there are some groups, like for instance, a lot of times chambers of commerce will have their young leaders or they're all the events I don't qualify for anymore because I'm too old, right? But I mean, maybe um, we need to be in front of folks saying, if you're in that mindset, this seems like something that wouldn't be, to me, it's almost, some people look at it almost like burial planning. You know what I mean? It's
Yeah.
like, well,
Yeah.
like I'll figure out where I'm going to be buried when I get much older. When in
Hmm.
fact, it's like, it's not really it at all because it takes so much to drive the value of the business. And like you said, I mean, I wish someone had told me very early on in my career that if I put 2% of every dollar I made in an account and never touched it, A, I would never have missed it. And B, I'd be sitting on a lot of money right
I know it's amazing, but it's also, I think it's a lesson learned that we weren't ready to pick up at that point for whatever reasons.
now. No, you're right. I
I
mean,
think we're dealing with a different generation now who's much more aware of their future. And so I just think it's part of what we should talk about
yeah,
so that somebody who's starting a business can start thinking about that opportunity. It's up to them to pick it up or not, just as it was up to me to follow along with my boss's idea of putting 10% away, but I didn't put anything away at that point.
yeah. No, I think this will be a chapter in the why I should have saved my baseball cards book that I want to write about things that I absolutely should have done, thought
Yeah.
of, known, or someone should have steered me to at a very young age, right? It's like the fact is we've actually all had millions of dollars worth of assets in our hand at one point or another.
Mhm.
The question is, do we keep any of it, right? And
Yeah,
so,
well, that's the wisdom we have as we get older, I think, and we learn our life lessons. So it's not always there when I mean, it's
no,
there, but we're not always going to pick up on it.
No, I actually think, and I don't want to get into, any sort of broad philosophical or religious perspective, but I would like to have a practice life and then like actually have a life. You know what I mean? I think if I could live an entire life and be like, okay, now like training, like
Yeah.
just personal boot camp that says like, I'm going to live my life. I get it now. I see all the mistakes now. But then I guess if you did that, everybody else would have the same opportunity and you'd be
Yeah.
competing
We'd all
against
be
other
in the same
people.
boat anyway.
Everybody would save their baseball cards and they'd still be worth nothing. So, yeah. But in the business context, I do think right now it's a good time for people. I also think there is something very encouraging for a business itself, the team, the staff, to know that there is a succession plan being developed.
Mm-hmm.
I think a lot of companies, the emotion of the company rises and falls with whether the business owner is happy and making money or not, or close to retirement or not, or healthy or not, as opposed to we're building this business for staying power. And whether I own it one day, in the future, or somebody else does, or one of you do, like we're building something that's going to run that path that you can have your career here if you want. Because I think in small business in particular, sometimes that can be a little bit challenging for folks to see, like, well, how does this play out over a long period of time? And how does it play out if my runway is longer than the owner's run?
Yeah. Yeah.
All right. So I think people do themselves a benefit in doing that. So what are we suggesting then? A couple of things. One you said was evaluation. I totally agree with that. What else?
I think talking about it and thinking about it, because you don't get where you're going without at least presenting it and having some kind of a plan for it. I don't think that somebody starting a business needs to have the end game in mind, but I think that they need to be open to what you can take a look at a 5-year or 10-year plan. Obviously, it'll adjust, but to keep in mind that that is one of their end goals, at least to put it out there, not necessarily have a plan for a date or a certain amount of bottom line numbers or anything like that.
Gotcha. Yeah. All right. Well, I think it's something for folks to be thinking about. I think as we're looking at other guests and things like that, maybe it's time for us to find some folks out there that transition much earlier on in their carear, or that have done some things that are maybe, forward thinking, that are still very early on in their business ownership. Because I think that's an important perspective. And then, maybe that'll be easier for some folks to connect with. So we'll put that on the list, right?
Okay. Sounds good.
All right. Kathi, thanks so much. I think it was a great topic, and we'll be back in another week with Selling the Dream. Have a great day.
Thank you for listening to the Selling the Dream podcast, starring Doug, Howard, and Kathi Fleck. Both Doug and Kathi have built and sold successful businesses and hope this podcast will help other small business owners do the same. Tune in every week to hear more tips for increasing the value of your company so you get the highest return for your years of hard work when it comes time to sell or transition your business. Can't wait till next week? Check out our website for more information at www.growththemes.com.